Hi everyone, welcome to today's video. First and foremost, thank you so much. We are almost at 300,000 subscribers. Zain and I cannot be more thankful for all the love and support that you have showed me. Even my mom and mother-in-law read every single comment that you guys give. So it means the world to us, to our entire family. So thanks from the bottom of our heart. Do let me know what you would want me to do as a 300k special. A lot of you have asked me that, hey Akshat, why don't you play this piano? I don't do it. My Srimati ji does that. I play guitar, by the way. So maybe I'll play that. Not right now. I'll play that at 500k, right? So that's a deal. So help me get there fast. Now, on today's video, what is it that we are going to do? So I'm going to talk about a highly undervalued industry. I have recently made an investment of approximately 10 lakhs in this undervalued industry. I have bought a few stocks that I will share with you. And I have created my own small case. You can go and check that out. A lot of you have been requesting that, hey Akshat, why don't you create your small case? So I have created this sectoral small case. The link is in the description box. You can go and check it. But do it only through your mobile app. Otherwise, you would not be able to access it, right? I tried accessing it through the web browser. It was not allowing me to. So with that disclaimer out of the way, let me put another disclaimer and then we will start the video. So another disclaimer is that this is not an investment advice. Here is a tweet for you that I did a few days back. It's a very interesting tweet. The reason why I made that tweet is that I get messages whenever I analyze stock that, hey Akshat, you analyze this particular stock. It unfortunately fell. A lot of people send me good messages also that, hey, you advised this stock, it went up, I made money. See folks, when I am recommending stocks, I am doing it from a long-term perspective in 99% of the times, right? If I am picking some stock for trading, for example, when I picked HUL, I categorically said that I am doing it for trading, right? Rest all the stocks that I have been recommending, those are long-term hold stocks. That's A. B. If I am recommending 50 stocks, I would have personally put in my own money in it and you have seen it, right? So that's 2. And third and final point here is that, see, out of 50 stocks that we buy together, please assume that in 10 stocks, you might suffer a lot of loss and it's completely okay. If you go and check the news today, Mr. Vijay Kedia, who is an ace investor, he is sitting on a loss of 30% on one of his core stocks. So the point is that in order to make money from the stock market, you don't need to be 100% right 100% of the times, right? You have to be right only majority of the times, and it is an approximation game. I say this openly, right? Even Mr. Warren Buffett can be wrong. He has been wrong multiple times. We are just mere mortals from that perspective. So I'm honestly sharing this perspective with you. So please take all this analysis and do your own due diligence and only then make investments. I genuinely share whatever I'm doing with you and I'm quite confident even on the stocks where I'm sitting on a loss, it will recover with time because I've been doing it for several years and it has worked out in the past. So I'm hopeful that it will work out again going forward in the future. And overall, my portfolio, it's very much in green and doing very well. So with that said, let's start today's video and we are going to do 3 things. Number 1, I'm going to talk about the undervalued industry that I'm speaking about. Second, we are going to take a look at general trends and what the growth prospects in this industry is. And finally, I'm going to create the small case of 4 specific stocks within this industry in which I'm making investments. So which undervalued industry am I talking about? So I am talking about consumer durable good industry. So first and foremost, what exactly is consumer durable and how is it different from fast moving consumer goods? They both sound very similar. So what is the exact difference? So when you look at FMCG, these are companies like HUL, Britannia, Dabur. They manufacture products like chips, soap, shampoos, hair oil, all this basic stuff that gets consumed very quickly, and these are fast moving goods, right? We require like toothbrush, toothpaste very quickly, right? We don't go and buy toothpaste only once a year unless you have really bad brushing habits. Of course, you will be buying toothpaste more frequently. Therefore, these are called as fast moving consumer goods. On the flip side, there are certain products, for example, fridge, TV, ACs. These are something that we don't buy every month, right? Or every 6 months. Usually, whenever we buy an AC or a TV, they last us for at least 5, 6, 7 years. So then we replace it and buy a newer version of it. So these are called as consumer durable goods. Durable why? Because the durability or the extent of time for which these can be used, that is slightly longer. Now without boring you with further details about consumer durable goods, let me talk about 2 very specific points about how consumer durable companies make money. First and foremost, they do something called as brand building. This is applicable across a range of industries, right from education to FMCG companies. And this is also equally or even more applicable when it comes to consumer durable goods. This brings me to a very interesting trivia question. What do you think is the profit margin for Apple products generally speaking? So let's pick iPhones. So tell me and type it out in the comment box. What is the profit margin for iPhones? And why do you think that the profit margins are so high? I will type out my answer also, but just a very quick explanation. The point is that Apple has created a brand which is very big. It is considered analogous to luxury. Therefore, people are willing to pay higher premium prices for Apple products. And Apple is a consumer durable electronic good company, and therefore it makes a lot of money because of high margin, and its balance sheet is very strong and very positive. So the first key point that you need to note down about consumer durable good company is that they thrive on brand building, because the stronger the brand gets, the stronger their profit margins become. The second key point that you need to keep in mind about consumer durable good companies is that they deliberately make products to fail, right? Now, I'll tell you a story. So when I was a child, my parents bought a AC at home, right? So it was in early 2000s, and the AC was called as Carrier AC. The brand is still very visible and it does fairly well. But that AC has been running in our house even till today. I'm sure that your parents or grandparents or even you might have these kind of experiences that in the olden times, in slightly older times, if you brought a fridge or a washing machine, it might be lasting up until now also. But now if you go and buy consumer durable good products in the market, they are so intelligently designed that they will by default fail. Do let me know in the comments if you agree with this. I am sure that I am going to get some comments that will completely concur with this story. So essentially, the consumer durable product industry has turned in such a shape that every company is trying to build brands, and almost all the companies build a mechanism where products are designed to fail within a few years. This will continue to happen because that is one of the major ways you will replace your fridge, TV, washing machine, laptops and bunch of different things. Before I jump into explaining the specific stocks that I am recommending from this industry, because this industry is literally a gold mine and you will see that in a minute why, let me take you through some of the industry key trends from India's point of view. So there are a few key points. The first key point regarding the consumer durable product industry in India is that the growth rate in India is very high. Now here is a chart, or rather a graph, that you can see of the entire world. This was a study that was done by Mordor Intelligence, and you can check that India has been highlighted in dark blue, which indicates that the AC market or the air conditioned market growth rate forecast between 2021 and 2025 is strong and it's growing. So that's a good sign. It shows that one of the key consumer durable good products, which is AC, it is growing. Now this study can be replicated for fridge, washing machine as well. Don't just simply assume that, hey, this is just AC study, so therefore just AC. No, because when people buy AC, they upgrade their entire house, right? Have you seen a house where people have AC but they don't have a fridge or they don't have a washing machine? Usually people will buy all these products together, so to say. Now a related point here is that India's middle class overall is growing massively. That is one of the key reasons why the consumer durable industry in India is set to grow. Now there was a very interesting article, and I'll put the clip here. It was in Financial Express, and it reads that nearly 55% of the Indian population is expected to join the ranks of the middle class. In fact, because India's demographies are much younger compared to China and the US, India's middle class could be the largest in the world in terms of number of people by 2025. Now, this is a very important fact that you need to keep in mind, that as our middle class grows, what is the first thing that they are going to buy? They are definitely going to buy fridge, TV, AC. These are basic things that middle class Indians would first buy, even before buying a car. Now, if we take a look at the competitive landscape in the consumer durable industry in India, you will find that the top 10 AC brands in India are deeply fragmented. And here is a look at their market share. And just take a look at this screen. I will scroll this through very quickly. So Daikin has approximately 11% market share. Hitachi has 11%. You have Voltas, which is 21%. You have Blue Star 12%. You have LG 16%. You have Carrier 6%. You have Haier, Whirlpool, Samsung. These have single digit market share. And these are all prominent brands, right? So the point is that the market is deeply fragmented. There are so many players available. Now slowly and slowly, some of these brands will do really well. Some of these brands will fall behind. But the bottom line is that there will be some kind of consolidation that will happen at some stage in consumer durable good industry in India as well. And then that particular brand, whichever you are betting on, it will become really big and it will become a massive profit churning machine. So therefore, it makes sense for us to make certain bets on certain brands. Again, I'm suggesting it from long-term perspective. Now let's look at some additional peripheral trends that are happening in India. So for example, you can take a look at this particular chart. It shows that the villages in India are getting more and more rural electrified. So rural electrification is happening. Government is spending a lot of resources in terms of developing electrification resources in villages. Now as more and more villages get electrified, people there will start buying all these consumer durable goods as well. So the demand will go up even in the rural sector. Another key related trend is that a lot of indigenous manufacturing is happening. Now because of 2020 COVID, the China supply chain has gotten bumped and India has directly benefited, especially in manufacturing. So for example, in consumer durable good industries, you require a lot of metals in terms of manufacturing these items. For example, you would have heard that, hey, when you buy an AC, there is a copper lining right within it. So all this stuff is now being shifted to India, and India is also ramping up its manufacturing facilities when it comes to producing durable goods. So all this indigenous push, what is it going to do? It is going to improve the profit margins of these existing brands. Now because of this indigenous manufacturing, the profit margins of existing brands will improve. That is where the buying opportunity kicks in, and that is the reason why I'm investing in this industry. So now let me take you through the specific small case that I've created in this industry. So these are the 4 stocks that I will recommend. Again, you can check the link in the description box, but please do it through your mobile phone only. Otherwise, you will not be able to access this small case. Now let me take you through the small case that I have created for this industry. And these are my top 4 picks. Given the current market scenario, I'll do a complete analysis of these 4 stocks. I will show you live investing also on tomorrow's video and explain why I have picked these 4 stocks within this industry. We will do a detailed analysis there. But for the time being, please check out this small case. And if you want to make an investment, it would only cost you approximately 8,000 rupees. So you can do an SIP or a lump sum payment. I have tried to keep this amount as low as possible for these 4 specific good companies. Now, why I have precisely picked these 4 companies only? Why not something else? That discussion, that stock specific discussion, I'm going to do tomorrow because I see great buying opportunities in these 4 specific stocks. In case you want to invest in this small case, just go check the link in the description box via your mobile phone. That is important. Otherwise, you will not be able to access this small case. So in summary, I wanted to give you an industry overview today about consumer durable good industry in India. So I'm betting on the fact that as India's middle class grow, this industry will grow with it too. And if you are an investor in this industry, you will benefit immensely. So I hope you enjoyed the discussion. Please do watch tomorrow's video also. It is going to be super important because I'm going to explain you step-by-step rationale as to why I have picked these 4 stocks from the consumer durable good industry. Do let me know if I have missed any facts or if there are any additional points that you would like to highlight on the consumer durable good industry. I will read through it and then I will shoot my video for tomorrow. So if you enjoyed the content, please like and subscribe, and I will see you the next time.